Hi, David Bassanese here, Chief Economist at Betashares. This is a snapshot of my latest market trends report. In fact, the first report for the new year of 2024. And the year has begun on a fairly positive note for markets. The global all country world index, so the equity index, was up 1.2% in January. That follows a pretty strong December where the index rose 4.1%. And I think the theme globally for the month was steadier bond yields, a steadying in the equity valuations after bond yields dropped and PE valuations went up in December on hopes that central banks can start to cut interest rates on the back of low inflation. What we did see in January is US economic growth in particular has remained pretty resilient, and the Federal Reserve themselves have pushed back against the idea that they would cut interest rates as quickly as the next meeting in March. So the markets maybe are getting a little bit ahead of themselves in terms of how quickly the US Federal Reserve can cut interest rates, and that led to just a steadying in the markets in January. But globally, the backdrop is still pretty good. The combination of resilient economic growth, particularly in the United States, and continued declining inflation, meaning central banks are done probably in terms of raising rates, and the only debate now is when and how deeply they will cut interest rates. In Australia, we also got pretty positive news right at the end of the month with the December quarter Consumer Price Index report coming in lower than expected. And as a result, the markets have now swung from thinking the RBA will, potentially could raise rates in February and then keep rates on hold to cutting interest rates in the second half of the year, which is certainly consistent with my view. So that was certainly a positive development in Australia. And so we are looking at rate cuts here, I think, at the same time as which growth domestically is still fairly resilient. The other element going on in markets at the moment, really the only real debate within equity markets is the old growth versus value. Large US technology companies that have been so strong for so long, will they give way in terms of outperformance to other areas of the market? And we did see a bounce back in the large cap tech area in January on the back of, again, a still fairly solid earnings outlook. So the jury is still out in terms of whether or not other areas of global markets can catch up or outperform. But at the moment, we are still seeing pretty good resilience in the large cap tech companies, even though valuations arguably in that area are a little stretched. That's it for me for now. Thanks for watching. Full details of my report are available on the insight section of our website, and I'll see you again next month.